Hi guys, Rich Patrick here, and today we're going to talk about how to invest your money in 2019. So I prepare some tips for you, hope that you like this. So, how to invest money, a simple guide to grow your wealth in 2019. So number first is figure out to invest money can be a real challenge, and it's sure you will agree with me when I say they certainly not storage information on investable available to the digital age. However, too much information can be overwhelmed, right? That's why they're made of guide to help the get started, grabs or investment. Is the perfect resources for beginners who want to start investing money in order to reach their financial goals. We structured the information in a way that is comprehensive yet not overweight. Conventional outline below. You will find every you need to know the start investment, beginning and preparing yourself financially future. So, free investment courses for beginners. Intro to rule number 1: investing. So, how to invest money. When figure out how to invest money, it's best start with the basis. I'm sure any financial advisor agree that with that. Their basic include settings the goal of your investments and determine where to invest money to the best achieve each goal. So, invest money for beginners. When you invest money, what are you doing is aid by the proportional of the company or for commodities with belief that the value of the company or commodity will grow over the time. Don't forget, investing it is not to get rich quick scheme, but rather a way to accompany growth wealth. You already have that. Good news is that even though investment is the way to grow your wealth, would don't have to have a lot of the money to get started. So, comportionate investment dedicated that even small sums of money can be turned into the fortune of the time, providing your select right intentions. Where should I invest money? So this is the most popular question that I read in your comments. So when detecting where you should invest your money, you have got plenty of options. Their opinion includes the stocks marketing, the most common and original, most beneficial of ways for an investor to put their money is into the stocks market. When you buy stocks, you will then own a small proportion of the company you bought into. When the company profits, they may pay you a portion of the profits in dividends based on the many shares stocks you own. When the value of the company grows over the time, so do the price of the shares you own, meaning that you can sell them at the later date for the profit. Other investment options include investment bonus. When you purchase a bond, you are estimately loading money into either company or the government. For US investors, this is the typically US government throughout. You can buy foreign bonds as well. Bonds are typically considered less risky than the stocks, however, the potential for the returns is much lower as well. The government company sells you the bond with the pay you invest on the wall over the duration of the bond's life cycle. Manual funds. So, rather than buying single stocks, manual funds enable you to buy the basics of stocks in one purchase. The stocks is the manual funds are typically chosen and managed by the manual funds manager. But there's the kicker. These manual funds managers charge percentage base of fee when you invest in their manual funds. Most of the time this fee makes the difference into investor to beat the market when they invest in the manual funds. Also, most manual funds investors don't actually ever beat the stocks market. So that's how it works. So pretty simple. Okay, saving accounts. By far the latest risky way and probably the worst way to invest your money is to put it in the saving account and allow to collect interest. However, as it usually in case low risk means low result. Returns. The risk when publishing your money into the saving account is negligible, and typically there were little to no returns. Still, saving accounts is payroll investing, and as they allow you to stockpile a risk-free sum cash that you can use to purchase other investors or use the emergencies so you don't touch your other investments. Physical accommodations. Physical accommodations are investments that you physically own, such as gold or silver. The physical accommodations offer serve as a safeguard against harder economical terms. Best way to invest money in your 20s. So, it's never too early to start investing. In fact, that a few years of the head start can offer you hundreds of thousands of dollars more money by the time of your reward. When you're investing in your 20s, it's best to start out in focusing on paying off any debt you may have, such as students' loans or credit cards debt. Debt works just opposite investments, exponentially decreasing your wealth rather than exponentially growing it. So it is a good idea to make getting debt free your first and foremost goal. Once you have our debt under ground control, start to reaching the stocks marketing and investing as much as you can. Take it much important as you are able and start hiring quality companies that you believe will grow in value over time. In case you are wondering, we will talk later about how to find gold investment, but for now you know that once out have the few conventional chosen, it doesn't matter how much or how little you are able to invest. It's always a good idea to invest as much as you able. But if you start your 20th investment as little as a few $1,000s a year, you will be able to own your way to predicting for retirement. How much invest? So the next common questions which I get is how to invest money to make money. So many people view investing as from income, and some are quite successful at making a living by trading stocks. This is the most glamorous form of investing. However, it isn't the type of investing that most people believe. Most people benefit from long-term investing. This involves letting your money competition in the stocks market in over 10 and 20 years. Long-term value, it is not how people risk. So, best way to invest money for short term is short-term investors make money by trading in and out of the stocks over the short period of time rather than buying and holding them for several years. So, while you certainly can make money doing this, the problem is that no matter how skilled and trading you become, there will always be a big element of the luck involved. Consider this. For beginners, investors, short-term trading comes down almost entirely to luck, and you can easily lose as much more as that your profit. Rather than thinking about the investment as a way to make short-term gains, it's better to think that investment as a way of making long-term gains. Keep in mind that you are still making money either way. Which long-term investing thought you are able to minimize your risk and negative. They are sometimes crushed effective of short-term volatility and prices drops. Okay, that's clear that you should invest in the long term rather than in short term, because you don't have enough experience, so it will be like luck to you in your case. So the third questions which we will discuss today is where to invest money to get good returns. Yeah, that's common questions for a whole year. Okay, investing money for small returns is incredibly easy and almost fail safe. For example, you can put your money in US trading bonds and be almost guaranteed to earn 2 or 3% annual returns on your investment. The problem is that 2-3% returns are not nearly enough for most people to reach their retirement goals. To actually build enough wealth to retire comfortably on, you're likely going to have to seek out higher returns. By far, the best place to find the returns is the stocks market by learning rule number 1: investment and buying wonderful companies on sale. A wonderful companies is one that will continue to grow as the years go by, serving whatever changes the market may throw at them along the way. If you are able to find these companies to invest in, achievable average annual returns upwards of 15% is certainly within the realms of possibility. Other less desirable investment options include index investings. Over the past 90 years of the CPM 500, which is all an index of the 500 biggest companies, is in US and pretty good reflection of the overall stocks market, and has delivered an average annual return on 9.8%, which is pretty well for investor. So this means that if all you did was taking your money and dump into the SP 500 will no time spent relating to the chosen stocks, you could still expect to make 3 or 4 times more than if your investment in the bonus, and upwards of 10 times more than what you would earn putting your money into the saving account. So next what we will talk about is investing in a 401k. Is another way to invest in the stocks market, and the real value of the 401k through the comes into employers is willing to match the portion of your contributions. This is essentially free money that doubles your investments regardless of what the market does, and it is certainly something you should take advantage of if you have opportunity available. So once you reach the maximum amount of the money that your employers is willing to match for the years through investment, that 401k becomes less desirable. What's the best way to invest money? So, of the investment opinions available, investing in the stocks market are the options that offer the most potential of rewards. However, you can blindly put your money into the stocks chosen and random of the expects achieve the great returns. Bottom line, in order to succeed investments is the stocks marketing, you have to use systems and strategy. At this point, I'd like to introduce you what I firmly believe is most effective investment strategy available today. Rule number 1: investment. So, investment strategy for rule number 1 is: rule number 1, investment is a process for finding the great companies to invest in and price that makes them attractive. The failures of this process are the MS of rule number 1, investment, which are give it for the determination whatever or not company is worth investing in. Management. One important factor to consider when analyzing investment potential for company is its management. Companies survive is due by the people who are running them, and you need to make sure that any companies to invest is managed to exclusion who are honest, talented, and determined. Before you invest the company, take time throughout familiarize yourself with its management and make sure that you trust them to grow company going forward. What the hell it mean? I will explain right now to you. Meaning, if you are going to invest a company, it needs to have some sort of the personal meaning of you. So there is a couple of reasons why this is important. For one, are most likely to understand companies that have meaning to you. This means that you will better able to analyze the future of the company. Investment in a company that has meaning to you and that you believe is also makes you more likely to research the company and stay on the top of the what is happening with it, which is the end. It's a bit part of the being successful in venture. Mode. When the company has a mode, it means that it's difficult for the competitions to come into a curve away and portion that company's market share. Margin of the safety. The final of the M4MS is rule number 1 is margin of the safety. The margin of the safety is the measure of how on sale company stock's price compare of the true value of the company. The difference between prices and value is an important distinction, as the company stocks price can vary widely without their value ever being affected. Here's the deal. As rule number 1 investor, the goal is find wonderful companies for the begotten price 50% of the actual value. By using our margin of the safety calculator, you can determine whatever company stock's price on the sale reversion to the true value of the company. If you want to learn more about the 4 Ms of the rule number 1 investment, stick the button below. Okay, how to, link will be in the description of this video. Okay, how to invest money in the stocks. Getting started investing is simple. Online trading platforms such as TD, Emergent, and many others have made it easier that either for beginners investors to buy and sell stocks without having any through or trading stockbroker. If you want to practice, you can read more about the paper trading. However, in order to give yourself the best responsible chance at successful and succeeding as investor and reaching your retirement goals, you will need to learn as much about investment strategy as you can, as well as how the practically applying of the strategies that you learn. To this end, one of the most beneficial things that you can do is enroll in the free beginner investment courses. Stock trading confers for beginners. So, stock trading courses that are designed for the beginners investors are able to teach you everything you need to know about the stocks market and how to choose quality companies, when to buy the stocks, when to sell, and much more. They are designed throughout the walkthrough the progress investing. Throughout the progress investment, the step to time teaching you investment strategies and how to apply them in the much more efficient way that they bombardment for sometimes confusing. And construction information you will be able to find online. If beginner stocks trading course sounds like something you could benefit from, I invite you to check my intro rule number 1 investment course. Link will be in the description. This course is free to sign up for, and is designed to teach you the fundamental rule number 1 investment that you can use to find plentiful companies and the attractive price and start achieving the type of the renters that will set you up for future success. So guys, it was my 5 tips how to invest money in 2019 for beginners. Hope that you like this. Please write me in a comment what you want me to talk about to you in the next videos. And as always, earn and spend money.